Inflation is a scary word for many investors. It means that the prices of goods and services are rising faster than the value of money. It means that your purchasing power is eroding over time. It means that your savings and investments are losing their actual worth. But what if I told you there's a way to make money during inflation? A way to protect your wealth and even grow it in times of rising prices? This is a way that's been proven by one of the most successful investors of all time, Warren Buffett. In this video, we'll reveal how Warren Buffett makes money during inflation, what his investment strategy is, what types of businesses he invests in, and what tips he has for you to follow in his footsteps. But before we get into the details, make sure you subscribe to our channel and hit the bell icon to get notified of our latest videos on investing and personal finance. Inflation is the general increase in the prices of goods and services over time. It's measured by the annual percentage change in the Consumer Price Index, or CPI, which tracks the prices of a basket of common items such as food, clothing, housing, transportation, etc. Inflation can have various causes, such as an increase in the money supply, a decrease in the production capacity, a rise in the demand for goods and services, or a shock in the supply of certain commodities. Inflation can have various effects, such as a decrease in the value of money, a decrease in the real income and savings of people, an increase in the cost of living, an increase in interest rates, and a decrease in economic growth. One of Warren Buffett's key tips on investing during a recession is to focus on the long term rather than the short term. He advises investors not to be distracted by the daily fluctuations of the stock market or the news headlines, but to look at the intrinsic value and future prospects of the businesses they invest in. He says that recessions are inevitable and temporary, and that they do not affect the fundamental value of good companies. He also says that recessions are actually good times to buy stocks, as they offer lower prices and higher returns in the long run. He compares buying stocks during a recession to buying groceries or furniture when they're on sale. He says that investors should be greedy when others are fearful, and fearful when others are greedy. One example of how Warren Buffett focuses on the long term is his investment in American Express in 1964. At that time, American Express was facing a financial crisis due to a fraud scandal involving one of its subsidiaries. The stock price dropped by more than 50%, and many investors panicked and sold their shares. However, Warren Buffett saw that American Express still had a strong brand name, loyal customers, and a profitable business model. He bought 5% of the company for $13 million, betting that it would recover from the crisis and grow in the future. He was right. American Express survived the scandal and became one of the leading financial services companies in the world. Warren Buffett still owns American Express today, and his stake is worth over $20 billion. Let's watch a clip from a YouTube video where Warren Buffett talks about focusing on the long term during a recession.
I will say this about gold. If you took all of the gold in the world, it would roughly make a cube 67 feet on a side. So if you took all the gold in the world, we could have a cube that went down there 67 feet, 67 feet high, and that would be the whole thing. Now, for that same cube of gold, it would be worth at today's market prices about $7 trillion. That's probably about a third of the value of all the stocks in the United States. So you could have a choice of owning a third of all the stocks in the United States, or you could have a choice of owning that little block of gold, which can't do anything but kind of shine there and make you feel like Midas or Croesus or something of the sort. Now, for $7 trillion, there are roughly 1 billion acres of farmland in the United States. They're valued at about $2.5 trillion. It's about half the continental United States is farmland. You could have all of the farmland in the United States. You could have about 7 Exxon Mobils, and you could have $1 trillion of walking around money. And if you offered me the choice of looking at some 67-foot cube of gold and looking at it all day, you know, maybe touching it, fondling it occasionally, you know, and then saying, you know, do something for me, and it says, I don't do anything, I just stand here and look pretty. And the alternative to that was to have all the farmland in the country, everything, cotton, corn, soybeans, 7 Exxon Mobils, just think of that. Add $1 trillion of walking around money. You know, maybe call me crazy, but I'll take the farmland and the Exxon Mobils.
Another one of Warren Buffett's tips on investing during a recession is to invest in productive assets rather than unproductive assets. He defines productive assets as those that generate income or increase in value over time, such as businesses, stocks, bonds, real estate, or commodities. He defines unproductive assets as those that do not produce anything, or depend on someone else's willingness to pay more for them in the future, such as cash, gold, or cryptocurrencies. He says that productive assets are better investments because they offer higher returns and protection against inflation. He says that unproductive assets are risky investments because they have no intrinsic value and are subject to speculation and manipulation. One example of how Warren Buffett invests in productive assets is his investment in Coca-Cola in 1988. At that time, Coca-Cola was facing competition from Pepsi and other rivals, and its stock price was depressed. However, Warren Buffett saw that Coca-Cola had a durable competitive advantage, a loyal customer base, and a global presence. He bought 7% of the company for $1.3 billion, believing that it would continue to grow and dominate the beverage industry. He was right. Coca-Cola increased its sales, earnings, and market share over the years, and became one of the most valuable brands in the world. Warren Buffett still owns Coca-Cola today, and his stake is worth over $20 billion. Let's watch a clip from a YouTube video where Warren Buffett talks about investing in productive assets during a recession.
Nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on.
A third tip from Warren Buffett on investing during a recession is to diversify your portfolio across different sectors and industries. He says that diversification reduces your risk exposure and increases your chances of finding good opportunities. He says that you should not put all your eggs in one basket, but rather spread them across different baskets. He also says that you should not follow the crowd or the trends, but rather look for your own niche and edge. He says that you should invest in what you know and understand, and avoid what you don't. One example of how Warren Buffett diversifies his portfolio is his investment in various sectors and industries, such as consumer goods, energy, technology, healthcare, transportation, etc. He owns and operates dozens of businesses under his Berkshire Hathaway umbrella, such as Geico, Apple, Kraft Heinz, Bank of America, etc. He also invests in hundreds of other companies through his stock portfolio, such as Amazon, Netflix, Costco, etc. He says that he likes to invest in businesses that have a wide moat, a loyal customer base, and a consistent earnings growth. He also likes to invest in businesses that are run by honest and competent managers. Let's watch a YouTube clip where Warren Buffett talks about diversifying his portfolio during a recession.
The price-to-earnings ratio of the S&P 500 is significantly higher than its historical average. What benchmark should an investor use in purchasing this index?
Yeah, I would say that in terms of the index fund, I would just take a very broad index. I would take the S&P 500 as long as I wasn't putting all my money in at one time. If I were going to put money into a index fund in relatively equal amounts over a 20 or 30 year period, I would pick a fund. And I know Vanguard has very low costs. I'm sure there are a whole bunch of others that do. I just haven't looked at the field. But I would be very careful about the costs involved, because all they're doing for you is buying that index. I think that the people who buy those index funds on average will get better results than the people that buy funds that have higher costs attached to them, because it's just a matter of math. If you have a very high percentage of funds being institutionally managed, and a great many institutions charge a lot of money for doing it and others charge a little, they're going to get very similar gross results but different net results. And I recommend to all of you reading John Bogle's written a couple of books in the last 5 years, and I can't give you the titles, but they're very good books, and anybody investing in funds should read those books.
In conclusion, Warren Buffett is a master of making money during inflation. He invests in businesses that have durable competitive advantages and pricing power, which enable them to increase their revenues and profits without increasing their costs or losing their customers. He also invests for the long term, which allows him to benefit from the compounding effect of his investments. He also diversifies his portfolio across different sectors and industries, which reduces his risk and increases his returns. However, investing like Warren Buffett is not easy or simple. It requires a lot of research, analysis, patience, discipline, courage, common sense, rationality, and humility. It also requires a lot of dedication and passion for investing. We hope you enjoyed this video and learned something new. If you did, please give us a thumbs up and share this video with your friends. Also, don't forget to subscribe to our channel and hit the bell icon to get notified of our latest videos on investing and personal finance. Thank you for watching, and see you in the next video.